Welcome to our webinar on Optimize the Value of your SOX 404a. My name is Kevin Shives. I'm a partner here at Sensiba San Filippo. We call it SSF for short. In this practice, I'm responsible for basically helping our clients get the right mix of people, processes, and systems. And obviously, a big part of that practice is around internal audit and SOX. We have many offerings in that area, and we have helped clients of all sizes from 100 million up to multi-billions of dollars in revenue, put in a SOX implementation plan, execute on that, and put it in maintenance mode for effective and efficient compliance. I have with me today James Taylor. James, why don't you introduce yourself?
Thanks, Kevin. Good morning, everyone. I'm a manager in the consulting practice here at SSF. I started in the SOX and internal audit arena back in 2004 when SOX first started gaining steam. Since then, I've spent time in both the professional services and industry. My focus has been primarily in the manufacturing, medical device, and tech spaces, working across the spectrum, helping management teams implement SOX programs, and then on the other end, helping to refine more mature, more elegant control environments. This includes evaluating processes and controls, which of course cover both financial reporting, application, and IT controls alike. If I were to pick a favorite work type, it would be implementations, hands down. Certainly they tend to require more effort, sometimes step by step. However, the results are almost immediate and often very measurable.
Excellent. Thanks, James. Okay, before we dive into the 404a, I just wanted to give everyone an overview of our firm if you haven't heard of us before. Sensiba San Filippo has been around for almost 50 years at this point. We do all the things that you would expect a CPA firm of our size and scope to do. We're at roughly 250 plus employees with about 18 partners. We're headquartered in Pleasanton, California, but we have reached throughout the U.S. and indeed even some international clients at this point. We have audit, tax, technology consulting is a big part of what we do, and of course, what we're talking about today, internal audit and SOX under our business advisory consulting area. Just drilling down within our firm a little bit more into where James and I focus in the consulting area. We have internal audit, SOX, technology solutions, outsourced accounting, and under the internal audit and SOX, our services are built in a way that we meet clients where they're at. You know, some people need just a little bit, and we would put that under our co-sourcing model. Or we can do the whole cycle, right? And that's full outsourcing. And of course, advisory to board is also in our toolkit. We're also a certified partner of Blackline. It is a tool that that offers clients an opportunity to really optimize their close, and that is a big part of our practice as well. Agenda today, pretty aggressive for 30 minutes, but believe me, we'll get through it. Going to talk about the differences between 404A and 404B just a little bit. Things we see in practice that might ring true with you. How do you create a compliance culture? We're going to talk through some highlights of doing that in a best practice way. We have some high impact recommendations that will serve you well if you're implementing 404A at this point. We're going to talk about the COSO framework, and it's pretty big and broad. You know, where do you focus? We got some ideas on that. Best practices and benefits, and then of course, some time for Q&A at the end. So jumping right in, if you've come to this webinar, you probably already know this, but just to make sure, you know, very simple way to understand whether you're a 404A and a 404B. And if you're a public company, you're one of these for certain. If you're a 404B, that means that the external auditors are going to have to sign off on the effectiveness of your internal controls. In other words, they're going to include that in their audit report. If you're 404A, you're not going to require the sign off from the auditors, but you are obviously always required to do your management's assessments of internal controls. I've never had a client that did not know where they stood on this. Your auditors are not going to let you get this wrong, because if you're under 404B, they have to do an opinion. So obviously that's going to be in your engagement letter. So those are just the basics of the differences between 404A. Now, how do they affect people is kind of the next section here. What do we see in practice? So 404A is a easier requirement to meet, at least from the standpoint of you don't have your auditors looking over your shoulders, but it's not a holiday from SOX, although a lot of people kind of treat it that way. So what we see in practice is if you're a company that has fallen out of the 404B requirement, this happens from time to time due to market cap changes, you've had a reduction in revenue and market cap, you can find yourself out of 404B, maybe temporarily, and you're back in 404A. So what do we see clients do in this case? They usually, from budget standpoint, want to cut this down to the bare bones, what they're doing inside for their assessment. They stop internal testing. They'll find themselves taking significant deficiencies and material weaknesses sometimes by the external auditors. This usually comes up at year end when they're going through and they're doing their final year-end work, and they'll find an adjustment, and then all of a sudden, they're required by the PCOB to attach that adjustment to a weakness in your control structure somewhere. So they will find it, they will call it out, and you will have to address it. And of course, people continue to sign off on their certifications, whether they're really doing much internally or not, which is not a good practice. Now, this may feel like an immediate cost saver, but what we see is that it's actually more costly in the long run. For one thing, you can lose or reduce the confidence that the external auditors and the board has on your processes and your controls and the quality of your financial statements, because they keep coming up with adjustments that they think you should have caught, right? And of course, if you're doing this all after the fact, there's a high remediation cost on these things. Now, the other case where you find yourself in 404A is that first year pass after you go public. Pretty much everyone is going to get that first year pass. And what we see is, folks aren't really using that time to get prepared for the 404B that they're eventually going to have to comply with. And because they're not doing that, they're not really building the culture and the infrastructure internally to deal with this. And then what happens is you find yourself in year two, and you've got yourself a bit of a fire drill under an unforgiving deadline. Very expensive and can be painful. So when we talk about culture, what we mean here is, how we do things around here, right? And you really want that tone at the top to say, okay, we have these requirements that we have to comply with, and everybody's involved, and it starts at the top. So usually we see this set by the CFO. It can sometimes be the CEO, but it needs to be somebody at the C level. That needs to be identified, announced, and then make sure that all your senior department leaders are also in on this, whether they're in finance or in operations, doesn't matter. They should all know about this. You should come up with an internal program of training on compliance that is, it's going to be kind of a continuous, hit on it, because it takes a while for people to really understand what this is all about. And then, of course, you've got to have a feedback loop, check-ins at least quarterly with your team to see how things are going and how are we progressing. So the recommendation, again, is use the time that you're in 404A to really build that culture, that framework, and the processes, and be laser focused on, controlling the real risk that you as management see as the risk to your financial statements. And you know what they are, right? We're going to talk about the formal way to support that, but I've never met a CFO and a controller that was engaged that didn't have a real good idea to what their real risk were to the financial statements. Once you get into 404B, of course, obtaining a clean opinion there is much more difficult, and suddenly not just what you think is important to the financial statements, but all sorts of other areas are brought into play. And a lot of this has to do with the fact that auditors are protecting themselves from the PCOB as much as they are, helping you to, catch misstatements or prevent them. So, and much of this really doesn't have much risk to you, or a lot of it can. I'll give you an example. So, revenue is always going to be a risk, and something that almost always, and something that you need to address. Maybe payroll for your company isn't that important. If you're under 404B, you're going to have to spend time on that payroll, whereas 404A, you can choose it. So again, focus your attention under 404A, focus your attention and your dollars on the areas that you think are the direct risk. And, you're going to have to address all the components of COSO. You should know what all of them are. You should know all of the areas that eventually are going to have full control and all your attention. But for 404A, focus on the components that are the most risky right now. And then, take a look at your resources. This is not the kind of thing that employees really have a lot of extra time to normally, I should say, to address these issues. And there's a skill set involved as well. You need to have people that have the expertise to understand how to get the control structure in place. Now, that's not to say that your internal resources aren't going to own this, because that's a big part of it. But, getting it started usually takes some focus beyond what an employee can do in an extra augmentation way. We have my last point here is establish a SOX PMO. And what this is really a clearinghouse. There's a lot of blocking and tackling that just has to be done as you're going through this implementation process. Lots of control questions, training schedules, working with your external auditors, just keeping everything on track. Whether it's internal or outsourced, you've got to have one of these to be successful. Okay, so where do we focus? We're going to talk about the COSO framework. This is all available knowledge. You're probably familiar with it. They updated it in 2013, the framework. They came up with 17 principles. And what we have seen in practice is that, management sometimes finds out about the 17 principles at the end of the first year audit process, when your auditors come to you and they say, have you mapped your 17 principles to your control structure? And you're like, okay, I'll do it. I'll do it now. But the idea is let's use this early on in the implementation process. It can help you, give you guidance in that framework to build it out. Now, we've got all 17 principles on the following 4 slides. We're not going to read all that to you. What we want to do here is point out some areas that I think are really key, and we're going to make this slide deck available to you. And of course, none of this is nothing that you can't get on the web by Googling. But we're going to start out here in the control environment. James, why don't you take us through number 2? Give us your thoughts on that.
You bet. Thanks, Kevin. Looking at this principle, what's here is that the board is demonstrating independence and oversight. I mean, more broadly, the theme here is that the board and the audit committee are involved. Getting your board and audit committee involved as early as possible and getting them used to this process is really key.
Yes, for sure. And the board may not be all that interested at this point in time when you're on 404A about all you're doing in SOX, but in your controls. Our recommendation is create a package and push it to them on a quarterly basis. It will get them in the the practice of reviewing it, which they need to do, and you of providing it. Go ahead, James.
Yeah.
Number 9.
Yeah, sure. Next one, risk assessment. Here, the expectation is that management, understands their environment, their business, and how it's changed. And there's definitely going to be changes. The key here is that management recognizes how those changes that have impacted their team, their processes, and their systems, and ultimately the impact to their financial statement risk profile is captured and understood.
That's right. It would be great if you could start out your SOX implementation and do your design documentation, start testing, and just charge right on through to the end of the year in a linear fashion. But that's just not reality, right? People are going to change, processes are going to change, and systems can often change. All of these things can have an impact on your control structure. So making sure that you have a process in place to be able to evaluate that at least quarterly to capture what's changed and how it might impact your structure.
Control activities. Granted, this COSO element is at the heart of it all. We're putting focus more or less on all three of the principles here. Thematically, management understands their key financial risks and has developed control procedures to mitigate those risks. This includes financial controls, IT controls, and setting expectations through documented policies and procedures.
Absolutely. So to the degree in each of these areas that you have assessed risk under 404a, you're going to need to design, document, test, and evaluate and report each of the controls, right? And we're talking, it's a matter of degree at this point in 404a, and that's based on risk. Number 14.
Yep, information and communication. What really connects here is the title, information and communication, and within the principle, the objectives and responsibilities for internal control. The controls may belong to management, however, the controls are performed by management's teams. Having appropriate communication and buy-in with those team members performing those control activities is really what's critical here.
That's true. And one of the biggest mistakes that I've seen in this area is that management or even sometimes outside consultants will come in and they will implement on the process owners, not with them. And they'll basically present to them, here are your controls and purchase to pay, for instance. Now go and do these. And the ownership just isn't there. So you want to make sure that your process owners are involved in the design and documentation of these controls so you get that buy-in. Number 16.
Monitoring activities. Here, the two words that really pop, that really pop are ongoing and evaluations. The term ongoing really sets the tone that management will need, as Kevin has mentioned, a continuous oversight and control functionality. Here it's recognized that validating the design is good, but not good enough. Management needs to know their controls are operating effectively as designed.
That's right. And there's really no other way to do that than test it. And, it's really holding up a mirror to the process and then seeing if it operates like it was advertised. I can't tell you how many times we've gone through and documented an area and everybody agreed this is exactly the way it works. You run the first test and you realize that we forgot something or the process owner did. And so that's just part of refining it. It's not a make bad. A failure of a test at this level in 404a is an opportunity to get things right. Okay, this slide here, bit of an eye chart. It's what I call the SOX cycle. And whether you're talking about your entire control system or an individual control, you really take it through this process. You have to think about the risk related to that particular control, the design and the documentation of it, and then you need to test it, and then you evaluate its effectiveness. Did it work? Did it not? If it doesn't work, then you got to go back through the cycle and see what you got wrong and basically adjust it, remediate it, and you'll be going into the control effectiveness, get yes, and move on to the next control. I've listed here a bunch of business realities that affect this. It's important to keep these in mind as you're going through this cycle. Okay, James, I think you were going to take us through best practices.
You bet. Thanks. As we've mentioned, SOX itself, it's not linear. It's a continuous process, which will require both vigilance and discipline throughout the process. I won't necessarily read through all of these. However, thematically, management needs to build a compliance culture, and that will be built through management leading by example, recognizing a focal point for execution. That's where we have the PMO, and then communication, training, and establishing that tone that SOX is not another task to pile into someone's inbox. Rather, it's a shift, a recognition that mitigating financial risk is a responsibility for all team members that needs to be part of their day-to-day activities.
Most definitely. So if you follow these ideas, right, you're going to get a lot of benefit from 404A. That compliance culture is going to be in place. That's going to be a big part of you being successful with 404B. You're going to avoid all of those fire drills and extra cost by making it go to the last minute. I think one of the most important things is minimize surprises with your audit committee and your auditors. And it's going to allow you to focus on, it's giving you that time, 404A, to focus on the most direct risk to your financials that you know as management, and to get those in place, those controls, and everybody trained so that you can be successful in that area and have the high quality financial data that you need for external and internal reporting. Okay, now I'm going to go and see if there are any questions. Dee, do you have anybody with any questions out there?
Yeah, we have a few that came in. So the first one is, how do I know if I have enough controls in place?
I'll take that one. Look, there really isn't a single KPI or count that results in a right answer, certainly not across organizations. It starts with your risk assessment. Where do you identify your key transactional flows, processes, and then risks within each process? And where you see a key risk, one that if realized could result in a significant misstatement or issue, you need to ensure that there's a control activity designed to mitigate that risk. If you do that across all of your processes, and let's not forget also the IT arena, then you will have what would be considered enough controls. Now, there's some subjectivity there, but if you know your company, its processes, and are transparent in recognizing that risk, you'll end up with a system of controls that's best fitted for your company.
Great. And the next one that we have is, what tools have you seen that can help with SOX?
I'll take that one, Dee. This SOX has been administered on the Office suite primarily for a long time. You're using Word for your documents, maybe some Visio. You're also using Excel for your risk control matrix, and of course, email, a shared drive, and all of this stuff can work and does work. But there have been definitely some improvements since SOX first came out in this area. Platforms that we really like is Blackline, that I mentioned earlier. It is, if you think about SOX and internal controls, if you have an effective, efficient, and complete close, right, that's predictable, both for the results and and the timing. If you've got all that close really locked down, you're going to have about 70%, normally 70% of your SOX kind of beaten back, right? Because that's where you're going to find most of your controls. And what we see is that clients that embrace a platform like Blackline and get their close in order, they can also use that platform to tag controls and to collect the data and to assure that those things are happening. And if you do all that, it's really just an amazing leap forward for the ability to use that platform to make SOX less of a pain and more effective.
Great, and that wraps it up for questions.
Excellent.
All right.
Okay, well, thank you everyone for joining us today. We appreciate it. If you have any questions or follow-ups, you'll see on the screen our contact information. We'd be happy to chat with anybody about any of this. So thank you for coming.